Welcome to the Bitcoin Basics podcast with your hosts, Faris and Gordon from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our disclaimer. Visit BitcoinBasicsPodcast.com to subscribe and discover other free content.
For anyone listening, this episode is visually intensive, so visit our YouTube channel, CoinCompass.com/YouTube to follow along. We use TradingView for all our charts, and you can sign up for a free account at CoinCompass.com/TradingView.
Hi, everyone. Welcome to another episode of the Bitcoin Basics podcast. I am your host, Faris, and we are doing a roundup of Bitcoin and some other markets today. It is Monday, the 26th of April. The price of Bitcoin is $52,350. The block height is 680,656. So today we're going to look at Bitcoin and Ethereum. Essentially, it's been some very interesting price action in Bitcoin just in the last 4 hours here, really. So let's have a look at Bitcoin. Now, in our last episode last week, I said this here was a big indecision candle. And what I liked about it was that we closed higher. So we had a higher low. We didn't, than this previous low here at 50,300. I said if we close below that, I'd be concerned. So that's where we're going into. So looking at this on a weekly chart, if you just ignore this new white candle here, if we don't look at that, this is where it closed. So that would not look very healthy to me. We closed below this level I identified as a key level. I was watching this on a smaller time scale. So I'm moving to a 4-hour chart. And here, when we went down to 47,700 and we bounced up, I actually tweeted that might be the low there. So here's a Twitter. This looks like a good BTC entry point, very overextended on the daily 4-hour and 1-hour RSI, and a 9 reversal in play from the tone phase indicator. So that looked like a low to me, and the RSI was turning up, and that looked like a good entry point if you're a short-term trader, but I was looking more at, I thought that would be the end of this bear run. As it turns out, we went even lower. So if I was trading, my stop would have gotten taken out there and I would be out because I thought the downside, so looking at this candle right here, see that wick down there that went all the way down to just below 47,000, 46,900 on Bitstamp. That there would have taken out my stop if I was a trader. Because if it broke that level, which is this blue line here, the next line of support was all the way down at 43,000. So I would have been taken out, but that just reversed incredibly quickly. And this is why I say the week, beginning now Monday, which is, it's not, it's Monday in New Zealand. It's still Sunday in some parts of the world. We've just bounced off of that. So potentially, if this continues, we could see the bull run is definitely over. We've had a pretty decent correction, and that would have been the new low there. Still too early to tell. I would be, this is a 12-hour chart now. So this 12-hour chart has closed above there. What I would like to see is we come down and we retest this blue line. If we close above this blue line, you know what? It's actually even worth pulling down to there. We retest down in here at 47,000 and bounce back up. Then that's a sign to get back in. We might not even do that. Bitcoin is notorious for just going. So I'm very, very tempted. I was tempted to get back in. I'm tempted to get back in now, but that would be based on my emotion, not on my trading know-how. So I'm waiting for a correction and to see if we hold. So I'd want to see it correct, come down, and if we bounce up again, then I'm in. So that's where Bitcoin is.
If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself.
Ethereum is looking very interesting. This is Ethereum versus Bitcoin. And it has been trading in this sideways consolidation since December 2018. So it's a really long sideways pattern. Now, as you know, anyone who listens to our show knows we are Bitcoin only. Ethereum, this looks like a handy trade. This is a weekly chart. This is a huge base. The longer the base, the more time in space. So we've broken out once, came back, broken out again. So to me, Ethereum versus Bitcoin actually looks like a good trade because there's a lot of upside. It's revisited these. Markets have memory. So people who bought way up here at 0.12 Ethereum BTC saw it come down. So if it's happened before, there's no reason it can happen again. Markets have memories. And there's really no support until way up here at 0.08. So I personally think that, yeah, this is a worthwhile trade. Again, I'm not an advocate of Ethereum like I am of Bitcoin. Keep in mind your time horizon. I'm looking at weekly charts here. On a shorter time frame, there is a lot more volatility. Weekly charts are a lot more forgiving. And those key levels I've just identified in Bitcoin, Ethereum, here is same thing. I'd want it just to retest this blue line, 0.0413. And if we break above 0.048, I can see potential upside all the way up to 0.083. Let me say that again. It's a bit harder when you're not working in US dollars and bit terms. So with Ethereum, if we break above 0.0484, there's huge upside until basically the RSI just runs higher. Next point of supply for me I'd be wary of is 0.0822, around there. So there's huge gap open here in Ethereum and Bitcoin where it's been before, and I think it could revisit. So Ethereum to Bitcoin looks like a handy trade. The other thing we want to look at, moving outside of cryptocurrencies and Ethereum, is the US dollar. Now, this is entitled Endgame, and we just did another podcast where we answered a listener-driven question about the endgame, and we were talking about the US dollar. What happens if stock markets correct or crash? Where do you want to have your money? And we looked at commodities. So because all commodities are based in US dollar, 2 episodes ago, I said I liked the price action US dollar, as in I think it was appreciating because we had 3 higher lows on a weekly basis. Well, we've since taken out one of them and we're heading down to the second. So this potentially was a short squeeze in the US dollar. Anyone who listens to Macro Voices podcast, they talked about this as well. We think this was just a short squeeze and the US dollar is still heading lower. So if the US dollar is going lower, things like your commodities and Bitcoin will go higher because they're priced in US dollars. So it's that reverse correlation. So let's look at gold. Now, gold has been a tricky one to trade. I don't really see a pattern here. I'm looking at this as a trader. I just don't see a distinctive pattern on a weekly basis. Potentially, the low is in for gold. So if we look here, that is just a nice low at 1678. It's hit that twice and it's bounced off. If we revisit it again, we're going to break down lower, go to below 1500. But look, that could be the low for the year in gold. Let's look at a monthly chart. We're only a few months in. Potentially that could be the low for the year in gold. And we are resuming a bull run, which based on fundamental factors alone, gold is due to perform very well. Silver, I think, is going to outperform gold. And if you look at this chart, a weekly chart, silver actually looks stronger than gold. It is contracting, so moving sideways. And I think silver to me is a better trade than gold. However, silver is a lot more volatile than gold. So again, investing, gold is a good investment, as is silver. But as a trader, there's more return for gold. But keep in mind, they call silver the widow maker. We can make or break your portfolio if you're trading it. Platinum looks even better than me. This is a weekly chart of platinum. We've got this right angle triangle here, and looks like as I said, the week is just starting here. So technically this candle should not exist for this analysis because we're looking at the week that was. It closed from the 19th of April. But here we break and hold above this, then I see platinum continuing to go up even higher. And this is in our last podcast, we talked about just basically how you want to be in commodities, where it's stuff that you burn, build, or eat. that's where I think the best investments are going to be for the next 5 years. This is corn, and we just see corn is just doing incredibly, incredibly well. I mean, just look at that. That's just absolutely taken off. This is soybeans, same thing. They're doing really well. We've had a nice consolidation period, and now we're taking off. And this is lumber. Lumber is insane. So you think about it. We're supposed to be in a global meltdown. You don't think people are going to be building houses, building infrastructure, but look at the price of lumber. I mean, that's just parabolic, as parabolic as Bitcoin. So very, very interesting markets. Again, they're really overextended. So what goes up must come down. And the higher they go up, the farther they'll come down. But we are in bull markets in your commodities. If the dollar keeps going down, you're just going to see these things going up. So again, just keep in mind that you're far better off trading and holding these things trading on a weekly basis. And you're even better off just holding them if you can. But if you make your money day trading, I'd be moving to a weekly time scale because it just takes out so much volatility. Case in point, Bitcoin. This is if you're a short-term trader, you would have gotten wiped out there just to see that. If you were running on a weekly basis and you got in, Bitcoin has been a bit tricky actually. This is a different to what I've seen. So very, very tempted to get back in here, but I think there's still a range in here in Bitcoin from 47,000 to 64.8. That's still a range. So we still got to break through 64.8 to go higher. And there's still some support there. So yeah, just be a bit careful. I mean, I like Bitcoin simply because I've been paying attention to it for such a long time. But this one I've found a bit difficult as a short-term trader. I would have gotten stopped out there. If you did a soft stop, which basically means you don't put your stop in until it gets alerted, you would have been fine. But just something like Bitcoin, once it goes down, it can just keep running and just run through your stop and watch you get decimated. So I would have been stopped out there. It would have been the right thing for me to be stopped out, but I would have been annoyed. But I would not have predicted this. Like, why did it do this here and not all the way back here? That, to me, that level of support gets touched again, it goes through, it would keep going. That's irregular. So I can't get upset that I followed my trading rules. Lesson here, what is your time horizon? Is it a weekly chart, which is what I'm doing? Then only look at your weekly charts. So to me, the week that was, this one here, that is not a trade. I would not short because we're in a bull market. I would not go long because that's a nasty candle. So the week just starts, for me on a weekly chart, this candle does not yet exist. If it goes all the way up to here, past 60,000, fine, I'll get in. That tells me it's time to go in. This could correct and go back down. We don't know. So long term just removes a lot of stress. If you're dollar cost averaging, as we recommend, what do you care if you bought at 58,000 this week or, at 48,000 last week and at 52,000 this week? That is not going to stress you out. So time horizon, holding, really just does benefit you in that you don't lose sleep at night. And that's the main thing. That's one thing you cannot buy is a good night's sleep. So thank you for listening. Please hit us up if you have any questions. And good luck with the foreseeable week, everyone.
Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.